Hi everyone. Today let's look at the jobs data. Then we'll follow up on Pepsi from yesterday as they did have some big news. That was not great for the stock. Then we'll look at the charts as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the jobs data was hot, but it wasn't crazy hot. So 216,000, that was up from the expected 170,000 that we talked about yesterday. So quite a bit higher than we thought. A lot of those jobs came from the government, 52,000 jobs coming from the government, as well as 38,000 in healthcare related jobs. Hourly earnings rose 0.4%, and they were up 4.1% from a year ago, both higher than the estimated 0.3 and 3.9 respectively. So everything here is still saying the economy is quite strong, jobs are strong, lots of openings still out there. The unemployment rate, however, was flat, 3.7 last time, 3.7 this time, but it's not ticking up and it's still well below the 4% mark, so everything still looks good like I mentioned, and this was not great for markets. They did dip originally on the news, and we'll look at that on the charts, and then it seems like we just got a little bit extended. We've been falling all week. The jobs data really accelerated to the downside in the pre-market. That was just a little bit too far for markets in my opinion. And then we kind of rebounded early in the session and ended up basically in the middle going into the end of day. Again, we'll look at that closer on the charts, and then looking at job creation relative to last month, 216,000 this month, 173 last month. So job creation still very, very strong. We did see some losses, however. They do mention transportation and warehouses saw a loss of 23,000 jobs. Hospitality and leisure continues to contribute big numbers here at 40,000. And then you can see that hourly earnings previous month was 4%. This month, 4.1%, so that ticked up slightly. We've seen that a little bit here and there on the downtrend really since March of 22. There's been a couple of tick ups and then they've collapsed much lower. Really, we want to see this go lower, in my opinion, get back into that more normal 2% inflation style raises in terms of hourly wage growth. And they mention here the U.S. economy continues to defy expectations of a slowdown or a soft landing or any kind of landing. The jobs market continues to be strong. In terms of earnings growth, that's kind of slowed down a bit. I feel like that was more expected. But in terms of the individual experience inside the economy, it still looks quite good. To PepsiCo, we talked about it yesterday as the stock that I highlighted, potentially for some opportunity. And then here this morning, we got some news from a grocer in Europe that is removing some Pepsi products from their stores due to price hikes. They're saying PepsiCo is just raising their prices too fast and too high to the point where they don't want to put them on their shelves, which is pretty interesting. It seems like they would just want to pass these things on to their consumers. As long as the consumer continues to buy it, I don't really see the issue here, but it seems like this big grocer is trying to take a stand, and they are a very big grocer, 12,225 stores in more than 30 countries, so massive impact here for PepsiCo. They say that they have been in discussions with PepsiCo for a while, but they mention here double-digit percentage raises for 7 straight quarters, rising by 11% from July to September, which does seem a little bit exaggerated. PepsiCo trying to take advantage of that inflationary environment. They also mention shrinking packages, and they say that it's due to convenience and portion control, but realistically, I think that is more just to get those profits up and raise those margins. They also mention here the CPI for Europe rose to 2.9% in December. So we're still seeing some pretty decent inflation in Europe, but nowhere near that 11% rise that we saw on Pepsi products. And I think it'll be interesting to see how this plays out. I do think this will have a large impact on Pepsi if they don't get it resolved. Over to seasonality just for a moment. We're still at the end of that 4th trading day. So first 4 trading days, we're still in this range where things are generally flat or down. Obviously, we've seen a much larger down move coming off of the massive rally that we saw in November and December. So we're seeing a week open to the year, which is interesting. Election years tend to be a little bit more volatile, a little bit weaker for markets, but just keep in mind, we do tend to see positive Januaries, but that really doesn't occur until about midway through the month into the end of the trading month. Moving over to the economic calendar, you can see that Eurozone CPI 2.9, better than expected. You like to see it. Even core came down a little bit, so that's good to see. And then looking at all the other numbers that we kind of already talked about, year over year hourly earnings 4.1% to the upside, month over month 0.4, still really strong numbers. You want to see those cool a little bit in my opinion. Participation rate missed slightly. All of the other jobs data was very strong. We continue to see weak economic data. Non-manufacturing, big miss at 10 o'clock. Non-manufacturing PMI missed a little bit, but it was slightly above the 50 line, which is still good. And then non-manufacturing prices missed to the upside, so again, a little bit inflationary there. Overall, still strong economy, except for that non-manufacturing employment number, which was a big miss. Moving over to max pain, you can see that 480 and 476 levels obviously held. 465 also held, so we kind of ended up in this mid-range, just above that first put wall at 468 and below 470, right in that range that we kind of talked about yesterday. Thought we might get down to 465, and we did touch it during the pre-market on the jobs data, and then we rallied from that level back into the middle of this range. So pretty normal finish here for max pain, but quite a bit weaker than we had been seeing. For a while, we were finishing up at the top of the puts, which would have been 476 for this week. We did not get that this week, so back into that mid-range, a little bit weaker. Not at the bottom of the calls, though, so still mid-range, like I mentioned. Moving over to the charts, let's take a quick look at them. You can see on that jobs data hour, big wick to the downside, got all the way down to 464.66 before rallying really aggressively on that first candle of the open up to the 55 EMA on the hourly. Did pull back really strong to 476, tested that level. And then we kind of rallied into the close here, finishing just above the neckline after hours. Momentum bullish, RSI slightly bullish here going into the end of the after hours session. So in terms of thesis, still intact. We talked about a potential bounce from this area, looking for that right shoulder, and I still think we're going to get that. It could be a little bit of a lower high. Maybe we don't peak out at this previous high. We hit that 9 EMA and then it fades on the daily chart, but right now did show a little bit stronger price action, slightly bullish on the candle, 0.14%. Momentum still very weak. RSI not great either, but still above the 50 line. Moving over to the NASDAQ, you can see that similar thesis. Big move down on the jobs data, got all the way down to 393.70 before rallying all the way up to 399. So big swing there. From low to high, that was about 1.5%. So big move early in the session, hit that 200 SMA on the 15-minute chart, pulled back to support at 395.85. Overthrew it pretty strongly, more strongly than I would have guessed, and then rallied here again into the end of the session and into the after hours. We'll pull that up on the hourly chart. You can see we touched that 55 EMA, pulled back. I really thought this 21 EMA was going to hold and then we would kind of bounce from there, but we overthrew it. Then we got back above it. So we're still above the 21 EMA going into the after hours, which is interesting. And then looking at that daily chart again, slightly positive day, 0.12%, still bearish momentum. If we see a step up on momentum going into the Monday session, that could be a nice little indicator that we're looking for that pullback back up to that 403 area. But at this point, I do expect any rallies to be met with sellers and that it would be a shorter term rally. And then eventually we're going to see a bigger pullback down to that 55 EMA, down at 384.20. Moving over to the Russell and the Dow. Russell, similar thesis, wicked a big low down at 190.70 or so, touched my next level, bounced off that one, pushed all the way back up to 195, and then finished right in the middle of that range, below the trend line, which is not great. That's our first close below the trend line, but momentum continues to tick towards bullish. I still think that that is likely. RSI got above the SMA, and it is holding above it here after hours by about 1 point. So again, looking for a little bit of a pullback early in next week. And we'll look at the longer term charts on the Sunday video. And then looking at the Dow, it's in this kind of wedge downward movement, tested 373.74. Held that level, bounced back into the middle of that range. Not great, pretty big overthrow. Might be looking a little bit weaker here, but right now the level did hold. Moving over to Pepsi, had a big leg down on that news that we talked about. Ended up down almost 1.5%. It did hold the 21 and VWAP, which is good. But momentum had a big step down. I would expect some follow through here on Monday. You still have 163.47 as support. Got into that zone on the wick low, which did find a little bit of support as well. And then you can see that here on the hourly chart. Pushed into that area, didn't quite touch it, and then rallied back up to the 200 SMA on the hourly chart, which is not great also. We want to see it get back above that. Right now, this looks quite weak, and it seems to be accelerating. Over to Apple and Tesla. Apple showed a little bit of strength on that first candle, sold off into the end of the session. Continues to look pretty weak here. Momentum is ticking towards bullish, which is good. We're above the SMA on RSI, which is also good. You're also seeing some volume come through here at a potential base. We saw a little bit of volume you can see on the profile. Let's go ahead and zoom out, get a bigger profile on that volume. Yeah, so pretty decent volume here. You could argue some of that is here, but really I would expect it to be more recent. And then you can see if we do rally up to that most traded zone, that would be up around 193. Could be a decent move from here. It's definitely oversold. Doesn't mean that it's going higher right away, but something to pay attention to. And then looking at Tesla, also moving lower, almost hit that 200 SMA here today on the 4-hour chart. Still holding at the trend line. This is the trend line from that consolidation. We're sitting right on top of it after hours, momentum ticking towards bullish, and it does seem to be finding a little bit of support in the shorter time frames. And over to staples and discretionary, did see a little bit of a flip here. Staples was down 0.22%. Obviously, this trend is still intact, but we're not above 72.50. We're still holding that 9 EMA, momentum fading a little bit here on staples. Looks like we're just barely below the SMA on the RSI. Volume accelerated. This could be a little bit of a topping pattern here, something to watch for. And then looking at discretionaries, very small bullish candle. Didn't quite get to my level. I would have wanted to see a wick of that 170.68 level. Momentum still bearish, RSI still bearish, but it's showing just a small sign of life. To breadth, 20-day breadth, flat on the day, 0.38 to the upside, 50-day average, 0.91 to the downside. You can see 9 and 21 EMAs have consolidated right there. Go ahead and zoom in. You can see it right in that zone, stuck between them on the candle. Momentum bearish, RSI bearish. Still think we're going to be headed lower in the medium term, but I think we might see that short-term bounce based on the 20-day average. Over to yields, as you would expect on the jobs data coming in hot. Yields went a little bit higher, 10-year rallying aggressively, 1.22% to the upside, hit that 200 SMA, overthrew it, closed right at it, momentum bullish, RSI bullish, 2-year dojied 0.09 down, momentum still bullish, RSI still bearish. Moving over to the dollar, you can see that jobs data pushed us up to that 103 level, wicked it, overthrew it, and then sold off really aggressively down to the next level at 102. Touched that level, rallied aggressively back into the mid-range, and finished basically unchanged. 0.02 to the upside. Still bullish momentum, RSI neutralized here. Momentum on the hourly ticking towards bullish a little bit. RSI right at the 50 line. So basically no change here on the dollar. Just threw a big wick to both sides. Moving over to J&K and TLT. J&K had a positive day, which was interesting. 0.13 to the upside. Touched that 21 EMA, rejected from there a little bit. TLT gapped down and fell, as you would expect. This looked pretty weak. We just had that fake out on Wednesday. Thought we might see a little bit of follow through there. We did not at all. Saw a down day, got the follow through. We're below 96.50. Next level of support down in that 94.70 area. Also got the 144 EMA at 94.29. And then you got momentum and RSI, both bearish. It's worth noting RSI is right at the 50 line, so you could see a bounce from that. But realistically, I would expect this to continue lower. Moving over to the VIX, you can see we threw a big wick to that trend line, finally touched it. Rejected from that level, almost hit the 55 at 1460. Did technically close below this trend line, which was interesting. Still have this shorter term trend below it, right at the 9 EMA. We're still above the short term EMAs as well. Momentum did fade a little bit. RSI did fade a little bit. This might pull back a little bit more in the Monday session, at least to the SMA. If the SMA breaks, then we could see a little bit bigger rally, more like a right shoulder formation. Then you would expect it to bottom out closer to this 1230 area. So a couple of things to watch for. Got the 9 EMA at 1315. Below that, 1230. Moving over to my accounts, not a great start to the year. I was down about 0.7%, but the NASDAQ was down massive, so I did outperform the NASDAQ quite a bit. I had those covered calls, which protected me a lot, and I was kind of looking for a bigger down move. I'd been talking about it for a while. Finally, it came through. And then looking at my positions, still got that covered call in the IWM, covered all my losses here. Actually made a little bit of money, $55 credit versus 37 lost on the shares, so still looking good there. This position goes all the way down to 187 for 4 weeks from now. It's kind of a long time to wait, but you can see that is almost $10 credit. So even if we see a rally, I'm pretty well in the money up until almost 197. So if we see a rally, still in good shape. If we fall, should be okay. And then looking at the Qs, still have my 200 shares. I did jump in and out of these a few times. Not sure if that helped me at all, but I did roll down to 395 on my longer dated call for $9 credit. So that does give me potential profit up to 404 if we do see a rally, but it also gives me a little bit more protection to the downside. And then I didn't move this other call here, still at 397, which is still out of the money. If it gets into the money, I think that's where I'm going to start making decisions to get into those shares. Once we get below that strike, that is my stop to get out. Does seem to be working a little bit better here in the short term. And then I still have a 396 put, my 1 day to expiration put for 88 cents, 2 of those to help with those covered calls. So still slightly bullish, but not super bullish. And then looking at the XLE, I did end up rolling out a week. We were technically a little bit bullish on the day, and I did make a little bit of money on that roll, but it's still pretty deep in the money with the stock at 84.72, and then my put position up here at 85.50 for $1.40 credit. Let me know down in the comment section what you thought of the jobs data and the news about Pepsi getting pulled from approximately 12,000 stores. Is that going to affect them? Is it actually going to happen, or is it just a threat? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.